Thank you very much, Toby. Now, I would like to introduce Peter Thiel. Peter Thiel is president of Clarion Capital Management and was co-founder and CEO of PayPal. Mr. Thiel holds a BA in philosophy and JD from Stanford University. After earning his law degree, Thiel clerked for Judge J.L. Edmondson of the 11th Circuit Court of Appeals, practiced law, and later traded derivatives. He co-founded PayPal in 1998, helping to build the world's largest payment service for individuals and merchants. After selling PayPal to eBay in 2002, he founded his own capital management company, which now has some $5 billion under management. In 2004, he became Facebook's first outside investor and sits on its board. Through the Peter Thiel Foundation, he has lent support to research in artificial intelligence, anti-aging, and mimetic theory through imitatio. He was honored by the World Economic Forum in 2007 as one of the 250 most distinguished leaders under 40. He sits on the board of overseers of Stanford's Hoover Institution and is taught at Stanford on issues of globalization and sovereignty in the law school. A chess prodigy, he ranked 7th in the US at the age of 12. Please join me in welcoming Peter Thiel.
Thank you very much. Well, I thought I'd take a slightly different cut at some of these questions about globalization, the apocalypse, the end of the world, from a financial markets perspective, and think about the question of this sort of the very strange dissonance that we live in, where on the one hand there are sort of all these things that seem to be quite bad going on in the world. I mean, we just heard talk about environmental degradation. There's many other variations of it. There's the global warming variation. There are all sorts of worrisome scenarios one can describe about the proliferation of nuclear weapons and all sorts of other exotic weapons. We can imagine scenarios that maybe there are no good human intuitions to even think about, like the construction of robots that go around shooting people and stuff like that. So there's sort of all sorts of things, and you sort of, if you read the newspaper, most of the time the front page of the newspaper, the news section is full of these stories about the imminent end of the world. And then when you turn to the business section or the financial section, it's always there's some perturbations, there's some small declines, but basically history is still proceeding as it was in the 19th century with the stock market trajectory in an inevitable northeasterly path with some small perturbations, some larger corrections, but everything sort of gets better every day in every way. And so one of the things that's very strange is how these two worlds coexist, because on one level you'd think the financial world has some counterpart in the real world. The real world, you have all these scenarios where things could go very badly wrong. The financial world, as I said, for the most part, doesn't seem to factor this in at all. And I want to reflect a little bit on why that is, and maybe some of the indirect ways it is reflected in my comments tonight. The first thing I would say about how it is difficult to reflect in is, well, if you thought that the world was coming to an end and you wanted it would actually be very difficult for you to know how to invest your money. So you could store it in a gold chest or some pieces of silver and bury it in a forgotten and hidden corner on the planet. But when the whole world blows up and there are no markets left and there's nothing left to do, there's nothing you can do with that. And so if you're an apocalyptic investor, if the world does not end, you lose, and if it ends, you also lose. So there is sort of this very, very deep problem. And if you're running a fund investing in the stock market, if there's going to be a nuclear war, well, there will be no stock market left, there will be no people left to invest in stock markets, and so it's on some level something not to think about. And then, of course, we have a context where the people who have predicted the end of the world, who tried to invest partially that way, have generally gone very badly wrong. So they're sort of the people in London's Hyde Park on the Speaker's Corner screaming about the end of the world. They are not people who are entrusted with large amounts of capital, and if they ever had any, they have probably lost it betting on the end of the world. It's been sort of a losing bet all the way through. But yet at the same time, And so, I think one of the questions one could ask is, what is the world going to be like? So, if you can't actually make any money investing in a world where everything blows up, the only way you can make money is on the assumption that the world does not blow up, and think about what scenarios it does well. And I'll give sort of a very abstract summary, and I'm going to try to drill down on that a little bit more. Basically, in the 21st century, the only kind of a world, I would submit, where things do not blow up is one where, and you have to define this very carefully, but where something that you might describe as good globalization takes place. So bad globalization is one where you have runaway global disasters. No globalization is one where things sort of break down and people fight each other, and because of the state of current technology, such a fight would be catastrophic. So as an investor, you need to bet on globalization. And in some sense, all the investments that will do spectacularly well in the 21st century are investments where you make an investment that is basically going on the assumption that globalization is going to happen in one form or another. Since, as we already established, all other scenarios, you simply lose money and nothing happens. Now, the big problem with this is that it's very difficult to actually define what globalization is or how it is going to happen, much less even what good globalization is. And sort of a very simple narrative way to describe it is that if you think about sort of the metaphors people use, there's the Thomas Friedman book where the Earth is flat, and sort of a somewhat maybe incorrect metaphor for the planet, but that globalization meant that everything was sort of flat and homogeneous. But you could very easily come up with a metaphor that's 180 degrees the opposite. So you can say the Earth is Mount Everest, and that globalization means that you have a world of unbelievable inequality, and that's what it means. And so the fact that you can so easily shift from one metaphor to the other, I think, is telling you something about how tricky and misleading the concept of globalization can be, and how many sort of strange dead ends one could run into. And a sort of very interesting way, I think, of getting at this is to reflect on the various ways in which people have thought globalization was going to happen over the last 300 years. There have been sort of many different trajectories, and they've basically been reflected in the financial markets. This has been going on. This is not a particularly new development, and I think one could say that basically the history of every financial boom or bubble has involved some story of globalization. And the bubbles were the ones where the globalization story turned out to be completely wrong, and the booms were ones where it at least had some element of truth and worked for a while. And you can probably, just to briefly describe some of these, you could start with perhaps the two great financial manias that started the modern era in the early 18th century, the twin booms in Britain and in France. The one in Britain was centered on this company called the South Sea Company. This was in 1720. It was going to establish trade with the South Seas. So if you imagine the globe of the world, one end is London. The South Seas are literally on the opposite end of the globe. So if you had a company that could trade with the South Seas, you basically have covered the whole world. And the name bubble started with all the other companies that got created in connection with the South Sea Company. There were all these companies that were involved in globalization of one form or another. So there was a company that was going to be involved in the trade of steel, the importation of beaver furs from North America and their re-export to Sweden, a company for trading in hair, a company for trading on the Orinoco River in Venezuela. This was in 1720. The Orinoco happens to have the largest waterfall in the world, so the business model is a little bit problematic for that one. And then you go to one where a company that was going to be profitable for all involved, but whose business could not be disclosed to anybody, and whose promoter left the country immediately after receiving the money for his stock offer, never to be heard from again.